So what is really going on with sales of Tesla in the US this year? Well, the Wall Street Journal has a super insightful article. Now, maybe I think it was insightful because it agreed with some things that I've been saying for a long time, but there was also some interesting shocks within the polling that they took. And so see what you think. Let me know in the comments below how much of this you agree with or don't agree with, but I think it's useful. Olson, this random citizen, I guess it's a real person, is turned off by electric cars. He thinks their potential to help the climate is overstated, and he resents the Biden administration's pro EV policies. Oh, there's people like that out there, really? Uh-huh. Who's been saying this for pretty much the entire time I've been on this program? It has been pushed down our throats, said Olson, who says he's a Republican. Yes, my Republican friends say this. This is the attitude of Republicans. Absolutely. Automakers are fixated on easing the practical concerns around electric vehicle ownerships, like high prices and charging hassles. But in the industry's quest to persuade more Americans to consider EVs, a swath of the buying public could prove tougher to convince because those are people that are opposed to EVs for political or ideological reasons. In a recent morning consult poll of about 2,200 American adults, that's a good sized polling number. They conducted this for the Wall Street Journal. About 4 in 10 said they had an unfavorable view of EVs. Of those who are opposed to them, 38% said their political views were a factor. Even more of those with unfavorable views, 63%, cited China's dominance of the EV supply chain as a reason. Yes, there are plenty of folks out there. I have some of my close associates who would prefer never to buy another Chinese product. It's a big thing. As for party affiliation, 31% of the people who identified themselves as conservative said they had a favorable view. Or in other words, only 31% of people who identified themselves as conservative had a favorable view of EVs compared to 66% of liberals. Now, I think this is just a nutty viewpoint on the part of my fellow conservatives who should be looking at practical things like the cost of ownership, the fact that it's made in the United States. It's the most US made product that there is of all the cars. Those are things I think that Republicans should be paying attention to, not worrying about whether Biden likes or doesn't like. In fact, if you don't like Biden, he doesn't like Tesla. So that should be another reason to buy a Tesla. But in general, it's spilling over because of this forced feeling. I've been talking about this and talking about this and talking about this. Conservatives tend to criticize public subsidies to support electric cars, as Elon Musk does, and dislike regulations that attempt to steer consumers toward certain products. Let us make up our own mind, would be something a conservative would say. Liberals are more likely to drive EVs for environmental reasons and tend to favor public investment in green energy. Still, the subject of EVs doesn't fall neatly across those party lines. Tesla is the world's top-selling EV company, but some Democrats have moved away from the brand, as chief executive Elon Musk has expressed conservative views on contentious social topics. Now, Elon would say, I haven't changed at all. That's Elon's opinion. He says, my views on all of these issues have stayed exactly the same, but the Democrats have moved to the left, and they have left me. I haven't left them. Steven Center, head of U.S. operations for Kia, said he's aware that electric cars have become a hot button political issue lately. He says, that old saying, don't talk about religion or politics? I think you can add EVs to that, he said. The political divide poses a challenge for car executives as they grapple with a deceleration in the pace of U.S. EV sales. Automakers are betting hundreds of billions of dollars on moving consumers to EVs and are planning dozens of new models in the U.S. this year. There's still a lot of new EVs several that have just come out, many that are coming out later this year. The fact that millions of Americans are ideologically dug in against electric cars will make it harder for automakers to comply with those rules, said Mike Murphy, a Republican strategist who has become frustrated by his own party's bashing of EVs. Again, I agree 100% with Mike Murphy. The Detroit native formed a nonprofit to ease the political divide on EVs and consult with car makers on ways to tamp down the negativity. There's a hearts and mind resistance to EVs, mostly on the Republican side, Murphy said. If you can't break down that tribalism, the industry isn't going to sell enough EVs to meet the coming rules. Automakers not only have to, so on the one hand, you're worried about making the rules, but that's the reason the Republicans don't want to buy them. Automakers not only have to win over conservative car buyers, some of their own dealers have a dim view of battery-powered cars due to ideological reasons. Dealer David Ferez said he thinks the media and government espouse an inflated view of the risks of carbon emissions in order to push more EVs into the market. Nonetheless, he says, I still put in $300,000 of electric car chargers at his stores because he wants to sell what the customer wants. So at Kia, again, they were continuing in their quote, we're talking to the broader part of the market that has an open mind about EVs rather than trying to convince the part that has dug their heels in. Now, as a marketer, I will tell you that there's a couple of different possible ways to run that strategy. You can say, okay, here's the sliver. 33% of the folks, 40% of the folks out there are pro-EV, and some of those have already bought one and some haven't, but that's going to be the easy part to go after, that 35 to 40%. Or there's the 60% that need to have their mind changed. If I get that 65%, that's going to be a good thing. So Elon Musk, providing us with conservative viewpoints on X and building up his conservative bona fides, even if those used to be the same as liberals, even though you can decide what you want to about whether Elon moved or the party moved, the reality is he should be endearing himself to some of those conservatives out there. Joe Rogan and some of these other programs he's been on have probably helped him on that. So I would like to see Republicans everywhere start to get the point that EVs are not a negative, they're a big positive, and Teslas in particular. All right, political persuasion is a pretty good indicator of a willingness to purchase an EV right now. Bozella of Kia said, I don't think that is a forever situation, he finally said. All right, let's take a quick look at the survey. The first part of the survey results I've already talked about, but here's why people thought it was a bad idea. These are the negatives. So what was a good reason? I'm sorry, let me make sure I've got, yes, okay. So negative reasons, a major negative reason, cost. 72% of people listed cost as a major reason not to buy. 17% said it was a minor reason not to buy, giving us 89% who see cost. 89% who still don't know how inexpensive it is to buy a Tesla. Number two was not enough charging stations available. So the word is still not out there. 65% cited that as a major reason, 21% as a minor reason, for 86 total that are still concerned about charging stations. And then you can put next to that, not as reliable as gas-powered vehicles at a combined 87%, not as reliable. And where would they get the idea they're not as reliable? Now, remember, we've talked about before how women in particular are not interested in being stranded by being out of fuel. So not as reliable, my guess is it fits right in that same thing, because I don't know any, even FUD, that's suggesting that they're not as mechanically reliable. All right, what about ranges are limited? That's 84% between the two, between major and minor reasons for not buying. Don't perform as well as gas-powered vehicles. Don't perform as well. That's 79, I'm sorry, that's 80, that's still 84%. Not as safe. What? That's probably because of the fire nonsense. That's 71%. Now, it might also be partially due to full self-driving, because lots of FUD going around that as well. Requiring get materials from China. That is 63% of the population consider that a negative. But again, Teslas are the #1 most American car. Not concerned about climate change. So they're not concerned about climate change. So therefore, it doesn't add in, but they're calling it a major reason not to. And then it goes against their political views. That would only actually be 38%. So contrary a little bit to what the article's saying, it's not that big a deal. What about better for reasons to buy? Better for the environment. There's actually 64% of the people that said that's a major reason to do it. And 90, wait a minute, this is 91% overall think this is an okay reason to buy it. So the environment, it may not be CO2 and it may feel like you're getting pushed down your throat, but at least people recognize that they're environmentally better, and that's a good thing. Less costly to operate. 79% of the people said that would be a good reason to buy it. Easier to maintain. 78% of the people. So hopefully Elon and Tesla are looking at these results, and they can take from these results some ideas in terms of how the advertisements should maybe be slightly modified from what they are right now. You know, the other day, Jensen Wang had a great quote. This was his quote: "Tesla is far ahead in self-driving cars, and all cars will be autonomous in the future." But did you know there was a lot more to that quote? So according to this article, Wang praised the 12th and latest edition of Tesla's full self-driving software, which abandoned the previous approach of hard coding commands in favor of AI-enabled neural network. He says, Wang said about it, "It learns from watching videos. This technology is very similar to the technology of the large language models, but it requires just an enormous training facility. And the reasons for that is because of the data rate of the videos. The amount of data is so high." And then he went on to say that technology is really revolutionary and the work they're doing is incredible. I think those are all good quotes. This is Randy Kirk, by the way. If you haven't hit the like button, now is the time. Please hit subscribe, notify. Okay, why do you want to hit notify? Well, Brian Wang and I just did a two-parter again this week. The first part is going to be all about AI and AGI and the compute necessary to get there. Elon Musk just said the other day that he thinks AGI will be solved in 2025. That's next year. Why does he think that? He's buying up all this compute. He's going to be he's going to own some of the biggest supercomputers in the world. Brian and I will talk about what are the sizes of these supercomputers. What is the size of the Tesla one? What's the size of the X.AI? How big is that supercomputer going to be? How does it compare with what the other guys are doing? Why do they need to have the very biggest? What's the reason? Isn't there some limitation on how big they need to be? And what does that have to do with AI? What does that have to do with AGI? And what's the race to number one all about? We're going to talk about all of that and more. And man, I consider this to be probably the best video I've ever done with Brian. And we've had some doozies. So be sure to hit notify so you find out about that tomorrow. And then let's get down below and hit that Patreon button. Do you think I'm doing some good shows? Do you think I'm providing some value? Are you supporting some other guys? Could you support this old guy? Okay. Anyway, while I don't necessarily buy the argument that I'm going to be reading about here in a second, I thought I should share it with you anyway. It has to do with the inverted yield curve. And you know that almost, I don't know, once a week or so, I will find a subject matter that I think you and I need to know more about. So, you know, last week it was natural gas. Why did natural gas go up a whole buck in such a short term? The week before that, it was copper. Why was copper exploding higher? And, you know, I go and I dig and I find this information and bring it to you. So the latest is, I said last week, I said, nobody's talking about the inverted yield curve. And then I found an article. So this is from Barron's. This week, the yield on the short-dated Treasury debt rose faster than on the longer-dated Treasury debt. As of the close of trading on Friday, two-year Treasury notes were 47.9 basis points higher than the 10-year. Now, you know, I report on this twice a day, in the morning and at night, every single day. I give you this inversion number, and I tell you how far they are apart, and I give you the trend. Is it getting farther apart? Is it getting narrower? And most of the time, I then say, but what does it all mean? Because it was supposed to mean the recession started months ago. So this is the longest in history that the inversion has been this way, has been inverted, okay? So such a gap or inversion, when investors pay more for owning shorter-term government debt than for longer-term securities, tends to suggest rougher economic conditions. It has commonly predated or given us evidence that we're going to have a recession. The yield curve plotting the returns of debt maturing at different times has been inverted for the longest time in U.S. history, and there's little sign that it's coming to an end. Well, at first glance, it might make sense. The shorter end of the curve is more influenced by the Fed's reserve monetary policy actions, such as this week's commentary from central bank officials axing any hope, any expectation for a summer rate cut. But the long term is where the Fed keeps fighting inflation. Solid data on claims for unemployment benefits have taken the 2-year yield dangerously close to 5% level. Bond markets are on verge of breaking to higher yields. 10-year is not there, wrote Andrew Brenner, head of international fixed income at the National Alliance Securities, shortly before heading. Anyway, as Wall Street celebrates the Memorial Day break, there are at least 2 stories being told about why the 10-year yield, which is responsive to economic growth, has been lagging behind the 2-year to make the curve even more inverted recently. Brenner says investors dealing with the 2 ends of the curve seem to be focusing on different things. The long end seems to be paying attention to a weakening economic scenario, but the short end is under fire from the Fed and some of the mixed recent numbers, he wrote. Expectations the economy will slow, which would make rate cuts more likely, is a reason investors may be buying longer dated debt now, locking in the currently relatively high yields. So I've been saying almost for a year, and this is not investment advice, that buying these 4.5, 4.6, 4.8, 5% yields on a 10-year, or even on a longer or 30-year bonds seems like a good idea for at least part of a person's portfolio. And they're still up there. They're still around 4.6 something right now. We'll look at that in a minute. But I don't necessarily think that these 2 arguments are what's going on. I think it might have something to do. The best argument I've gotten so far is the Fed is offering way more of the short-term yields than they are of the long-term yields. So it's harder to get enough market for those short-term yields. And so the rates are going up more. All right. So we've got, okay, you know what this day is? Well, this is a holiday. So where on Sunday night, we would normally give you the financial expectations for the week, what's happening with the, any earnings reports that are coming out or any kinds of reports that are coming out. We do that when there's a holiday. We do it on Monday night. So we called it Tuesday morning. All right. So today, what we've got a lot of is we got a lot of Fed speakers. I think we have 5 or 6 or 7 Fed speakers on Tuesday. And as my common comment on that is, what could go wrong when you've got 1, 2, 3, 4, 5 at least Fed speakers out tomorrow. Then we've got the S&P Case-Shiller Home Price Index coming out at 9 o'clock Eastern tomorrow morning. That is expected to be unchanged at 7.3%. That's an annual rate based on year over year annual rate, 7.3% year over year increase in the price of your home. Consumer confidence comes out at 10. That's expected to drop a full percent from 97 to 96. That would be a less of a drop than I would expect, given the huge drop on the other consumer confidence numbers that came out last week. So that would be modifying in terms of that very bad drop last week on the other, I forget which one that's, I get them backwards. Anyway, let's go on to Wednesday. We've got a couple more Fed speakers on Wednesday, and we have the Fed Beige Book. This is usually something I need to take a deep dive on. So on Wednesday, I will be expecting to take a deep dive on that. And then Jeff Lutz and I will talk about it on Wednesday night in terms of what was in there that we need to hear about. On Thursday, we get initial jobless claims. They were 215 last week. They've thrown their dart against the wall and come up with 218,000 for this week. They're never close. I mean, it's just a ridiculous number. So never mind what they're thinking is going to be. It'll be interesting to see if it does start to increase more. GDP, first revision. Now, this is an important one. Listen to me. Please, if you're still with me, listen to what I've got to say here. The first time they came out with it last month on the first quarter, okay, we're now 2 months away, right? 2.5 months, no, 2 months away from the first quarter. When they first reported this last month, they had it at 1.6. The profits, the economists that were polled are predicting this will drop on the revision to 1.2. That's a big change. But what else is it saying? If the first quarter was only at 1.2, and we know the economy is softening, we don't know how much, but we know it's not staying up at the levels it was last year, and the government spending isn't there, where is it going to come from? So I'm saying this is more evidence. I'm hiking my number to 40-60 now. 40% recession third quarter. 40% now. 60% no, 40% yes. If this GDP revision comes in at 1.2, that would tell me we're close. Now, the Beige Book is going to give us a projection of the second quarter also. That'll be interesting and might also impact what I'm thinking. All right, advanced U.S. trade balance of goods. Nobody's guessing that. Last month, it was $79.8 billion. Retail inventories last month was up 0.2%. Wholesale inventories were down 0.4%, but those are expected to be too hard to figure out. So the polled people were not willing to say what they thought was going to happen. Pending home sales last month was up 3.4%, which is a very high number for March. And that's what I'm saying about the winter was much better than expected. So they're expecting April to be down 0.4%. A couple of more Fed speakers, and then we get to Friday, which is the day that will change everything, or not. Personal income expected to be up. This is the PCE report. Personal income last month was up 0.5%. I believe that was a shockingly high number. Expecting this month to only be up 0.3%. That's still too high for the Fed. Personal spending last month was up 0.8%, shredding the personal income number at 0.5%. And this month, they're expecting that to be 0.4%, still way too high and still shredding by, what is that, by 33%. People are increasing their spending 33% more than they're increasing their income. That's unsustainable. The PCE index, the headline number, last month 0.3%, expected to be 0.3 again. The year-over-year number last month was 2.7, expected to stay right there at 2.7. Those two numbers would not be good for prospects of lowering interest rates later this year. They're not bad, they're not horrible, but they're just not good enough to cause the Fed to make a move. Core, there's a potential here for the core to help out. So last month it was up 0.3%, way too strong. This month they're saying it might only be 0.2% on the month-over-month basis. The core PCE for the year-over-year last month was 2.8, expected to stay at 2.8. That would not be good enough to get the Fed started in the direction that many would like of doing a kind of cut. All right, let's take a look at where the pre-market is right now. Of course, there is no after-hours market for Tesla today. So the pre-market, though, let's start with bonds. We got the 10-year is down 1.4 basis points, and it's been falling. It was only 1 basis point last time I checked. It is falling. It's now at 4.459. So that is still, as mentioned, a super good number if you want to lock in some long-term interest rates. We've got the 2-year down 1.5. So that those two stay almost exactly the same in terms of the inversion. But listen to this, the 2-month is up 3.2. So at this point, are we at 100 yet? We are not at 100 yet, but we're very close to 100 basis points. That was only at 75 basis points. Only, I'm going to say 5 weeks ago, it was at 75. So that inversion has been widening. Both inversions have been widening. All right, let's check out oil. Oil prices. The Texas Intermediate up $1, Brent basically unchanged. So that leaves them about $4.50. No, yeah, $4.50 spread, which is tending to suggest that Middle Eastern concerns are there. Natural gas up 0.08% at 252. That's still a good, strong number for natural gas, way up from where it was a month ago. Gold is up 1850 at 2353. So that's now moving towards that slightly higher end of its range recently, but still pretty much in the middle of its range. But that silver is up. Wait a minute. What happened here? We lost it. Silver is up 4.48% in the pre-market. to 31,865. We got copper up 1.37, 4,818, not really close to getting back over that $5 number again. We got the dollar firm, and we've got the Bitcoin up 375 at 69,210. And the Dow, the equities, give them to you real quick here. The Dow is up 18 or 0.05, S&P up 2.75 or 0.05. The NASDAQ up a little stronger, 17.25 at 0.09%. All three of those are dropping as of this moment from where they were just about 40 minutes ago. All right, I think that's all that there is to tell you right now. It has, oh no, there is one more thing. I want to let you know, Brian White and I had a great conversation about the all the other competitive cars. We went right down the line, all the US manufacturers, all the European manufacturers, all the Chinese manufacturers, the two South Korean manufacturers, but we didn't talk about the Japanese competitors because there aren't any on BEVs. So, but all the rest of the competitors, we went down the line and we talked about them, and Brian had some good things to say about a couple of them. And particularly, he was kind of happy with Ford and Mercedes right now. But find out what he wasn't unhappy with and what's doing good and what isn't doing good. I think you'll find it very informative. There is the card, and then hit that notify button because Brian Wang will be on tomorrow on a show that I just can't say enough about. It was, when we got done with the show, I was just like, my brain was exploding from all of the phenomenal things that we talked about. I think you do not want to miss that show around 11 tomorrow. Okay, that's it. It's been great talking to you.